Hi friends, this is my third video in the lecture series on behavioral finance. So we have discussed in my previous two videos recency bias and sunk cost fallacy. So today we are going to learn little bit about the confirmation bias. So we will first understand as to what the confirmation bias is. Often it happens that you form a view on something. It could be relating to anything, including markets and the investing, based on your past experiences, based on your perspective, based on your intuitions, based on the information that you gather informally from different sources, and based on the view that you form on the basis of all these things, mentally you are prepared to do or not to do something. That means you have decided to do or not to do something based on these perspectives, these biases, these informations that you possess, your past experiences and all. And you simply want that your view is confirmed by some event or is confirmed by some other person, and you are always on lookout for confirmation of your views. As soon as you get some information which confirms your views, you start suffering from a bias which is called confirmation bias. Despite your view having been confirmed by some event or some news flow, or by the sharing of the same view by your friends or fellow investors, etc., still you may be, what can I say, you may be suffering from a bias based on, not based on the data per se, but based on views, based on your experiences, etc. So when the data is ignored, then there is always a risk that the decision which you may have taken may go wrong. Like, say for example, I'm just citing an example based on the news flow which came in just today. Suppose you form a negative opinion on Adani Group. Suppose you have formed a negative opinion on Adani Group based on your perspective, based on your reading, based on the news flow that you get, based on hearsay or what other investors or friends in your circle are thinking, based on the social media inputs. Suppose you have formed a negative view on Adani Group, and today there is some news item published in some US based news portal, etc., something like that, and based on the negative news item published in some US media, stocks of Adani Group fell on an average by around 10% today. So I'm just trying to link the two things. You were having a negative opinion on the Adani Group stocks, and your view gets confirmed by the news flow today. So you will now start suffering from confirmation bias. That means your view is confirmed by some external news, some external event, and accordingly whatever decision you will take now onwards to invest or not to invest in the group shall be effectively impacted by this confirmation bias. Maybe after some time it may be revealed that the report about the Adani group was malicious, it was malintended, it was aimed at harming the group and was planted by some vested interests. It may so happen. You can never you can never rule out such possibilities. So it may always happen. Therefore, the confirmation bias often makes us commit mistakes in the investing process. So, confirmation bias is also a sort of emotional bias which impacts our investment decision making process. I hope this video explains the concept of confirmation bias to you in simple language. If you like this video, kindly do subscribe to my channel and send your comments. Thanks a lot.